Hi, Nab. Do you hear me?
Yes, Sandeep. Hi, how are you doing?
Good, good. Thank you. Hi, Ethan. Hi, David.
Hey, how's it going?
Excellent. Thank you. So, do you have, okay, it's okay not to have your camera on. That's okay.
I can put it on.
Yeah. Yeah.
I'll join the party here. How's it going?
Yeah. Good, good. Thank you very much. All good. So, is this the first time you have joined, right?
This is my first time. Yeah, I'm a prospective searcher thinking about either doing a self-funded search or potentially raising a fund at some point, but still a W-2 right now and just dipping my feet in.
Yeah, it's a fantastic, at least better than mine. Then when I was fired from my W-2 and then I started it. So it took me 2 years to understand what to do. It's a better thing to always think ahead.
Oh yeah, you control your own destiny here, right?
Yeah, yeah. Sorry, I'm a little, there's a little bit of allergy. So we'll wait for a few minutes. There was a bunch of people who have subscribed to this. And last time also, this is the second time we're having a conversation on this topic. And I'm not an expert in these things, but I am just exploring the options with you. Nayab is my friend and my business partner. So he and I have been contemplating, it's like we not only acquire businesses, but also offering some advisory services to do some corporate turnaround or business turnaround based on our. And then while we're doing that, we thought, hey, why not we think of sharing this thought with the searchers, Hi, David.
Hey, good afternoon.
Good afternoon. So
Hey,
searchers with the searchers also. Where are you guys calling in from?
I'm in Orange County, California.
Awesome.
I'm in New York.
Oh, okay. Awesome. So I am just looking at how maybe one more minute and then let me put it on. Are you guys okay if I put this thing on searchfunder live YouTube so that more people can join?
Sure.
Okay.
And where are you two based?
I am in Dublin, California.
I'm in San Ramon, California.
Okay, just a minute. Yeah. So we are all good. So okay, just a minute. I don't know why this is. So do you guys hear anything like right now, or is it okay? Any background noise? Okay. So when I started this conversation, oh man, just a minute. Do you guys hear anything background noise? No?
No, it's good.
Okay.
All clear.
Okay, good. Yeah, thank you. I just shut it off. So what David and Ethan and I thought about a few weeks back when I was looking into into this businesses, it usually takes around 18 months, they say, for a searcher to find a good match. Sometimes they are on an average, sometimes they are lucky, sometimes they take so much time. And it's been a journey for me also. And now I'm getting a lot of traction and a couple of LOIs every 2-3 weeks. And it's a matter of time then when something clicks and we own a couple of businesses. My hope is that we will be able to hope 2-3 businesses this year and go on. Now, I'm not a private equity firm yet, but like Ethan mentioned, I also have the similar plans that at this point I'm a self-funded searcher, but and I've made a team of partners who are willing to put in some money of theirs in the game, and we will depend on creative financing otherwise. But goal is that in next 2 to 3 years, when we have enough successes, then we can go back and to the investors and say, hey, why don't you come and join us? But all that is set aside. I want to tell you that I realize that we have been leaving this entire segment of businesses, which we call distressed businesses, for some reason or the other. Or I'm not saying that we can go and buy bankrupt businesses just like some of the YouTube stars and business people are buying, like somebody, I forgot his name always. He bought Pier 1 and other companies at pennies to the dollar. Now, I'm not there yet, but what I'm planning to do is we look at so many P&Ls and say, oh yeah, this is not cash flowing, this is not cash flowing, I will not go in this and this. But NIAB has been helping me understand that if we say remove a few things out of that fluff or that thing, one example is that in one company we were looking at, the owner who was thinking of retiring and had a plan of exit in 3 years met a consultant who said, if you put in, say, $500,000, you will turn around the company and it was a successful company. In marketing, $500,000, and you will be in the $5 million range or something. So that guy believed and spent that much time, but all that went waste. Did not help him increase the valuation. But if you look at the financials of this 2-3 years, he was almost on the break even. Whereas I think it was the right opportunity for us, even though I didn't get it because I was a little more greedy and didn't give him the right price, I guess. But that happens. That's my story. I would request NIAB to just throw in and maybe half a minute of explanation, background and what he is and what he's trying to do.
Sure, Sandeep. Thanks a lot. So guys, Nayab Siddiqui, I'm partnering with Sandeep. So we work together in quite a few, initiatives. And on the side, I've got like a background in finance for the last almost 27 years. Had been VP Finance, CFO for a couple of companies, both large, small-sized companies internationally, as well as in the US. So now I'm working as an advisor as well. So Zena Ventures, you can see in the background. So we are advising small to medium-sized businesses and also searchers, and our suite of services are around, helping them with acquisition and post-acquisition as well. And on the topic, in fact, I mean, we were just like always deliberating that why we are always looking at first of all the bottom line and how much cash a company is generating, but we sometimes forget about the potential of the business. And there are so many businesses who are not doing a few things right, and that's the reason they are in that shape and form. And a lot of times we simply ignore them. So we were looking at a few business. One of the examples that Sandeep just mentioned about that marketing spend. Similarly, there are so many businesses who are not like able to sort of structure their operations well, be it on the profit and loss side or on the balance sheet, right? And that's why they are in that form. And I think for us as searchers, it's a big opportunity to look into those businesses or opportunities as well, and try to see if we can sort of turn around those businesses and create value for us or for searchers. So that's what the idea was, and that's why we thought let's take up this topic with other searchers and explore what they are seeing.
Okay. Ethan, do you have? Yeah, go ahead.
What? Sorry, what are you asking me? My background?
Yeah.
Or?
Yeah, just background and what do you think about this topic? And we just, this is not a webinar. We're just having
Oh
a
yeah.
conversation. Any input, anything is, unless you feel I'm putting you on a spot here.
No, no, no. I mean, I'm happy to be put on the spot. I don't know if I have many words of wisdom here. I'm just kind of dipping my feet in the water here. I work at a tech startup. I've run a small real estate company several years ago. I am, interested in this space as well. And I think there's definitely a lot of things where you can change one or two levers that have kind of an outsized impact on either, bringing in a little bit more business from so many companies that aren't even running Google ads and answering the phone when people call them, to, outsourcing labor to the Philippines when we have, kind of maybe some bloated labor expenses stateside that can be a little bit more efficient too. So I think there's a lot of opportunity all around. I'm just interested to kind of find these businesses and hear from other people in the process for looking for them and how they've actually done these things. Because this all sounds great on a high level, but obviously I haven't dove into the weeds here and actually looked at one of these businesses very carefully and looked at where I can pull these so-called growth levers. So I'm just curious to learn more.
Awesome, thank you, and we will have a great conversation. David, you want to say something?
Oh yeah, no, nice to meet you all. I was a former corporate lawyer turned investment banker. I have my own investment bank. I raise capital for small, mid-sized companies, as well as kind of do M&A and roll-ups for lower middle market companies, mostly in North America, but a few select internationally. And so I was really excited by this topic. Right now I think we're seeing a great folks are not targeting this industry as much as they could be. And I think, it bodes well for searchers who are willing to take that leap. And I think really, I was interested in kind of understanding the approach from an acquisition perspective. I deal with companies that are often, solid, businesses, good foundations, but, have lumpy sales or lumpy, earnings. Some years they're up, some years they're down. And a few tweaks would really do them well. I guess the fundamental question is, how do you approach that from an acquisition? I mean, I would think most of the cases that I deal with, we always have some kind of earn out, that's tied to, a turnaround, scenario, but that upfront, sort of purchase price becomes, unless they're in kind of really desperate mode, that's the challenge I see in coming up with a sort of fair, financial, number to get in there. And because certainly you want to have control over the operations if you're coming in. So you can't come in on on any basis other than a, fully controlled basis. But you'd obviously like to keep their, interest in the business for stabilization, unless you don't see a need.
Yeah. So I will share a couple of levers which I have realized after I have been a pricing. I have some interest in the pricing strategy firm also. So I'll give you my understanding about how both of you talked about some levers. One is the pricing, and I saw in various of my conversations with the sellers, they didn't have the right understanding about how and what price level they should be at. So it's like saying, and I did multiple conversations on pricing strategy also on searchfunder, but they always tell me, oh, for example, my customer is at 8, another my competitor is at 8, another competitor is at 10. I think I'll be good at 9. So if that's what you have in mind, and then you stuck with that for next 30 years or 25 years, and you're happy, that's one area where I see the improvement or lever. The second lever, which Ethan talked about, was Google Ad and all that. So I will say it in a different way, a little different way to add to what he said. I ran a small marketing agency also 2 years back, but I just I exited from there. When I was talking to a lot of old school people, they don't listen. They didn't listen. I shouldn't have, they didn't listen that they need online presence. The answer I would always get is, "Oh, I'm busy for next 3 months. I'm busy. I'm booked for next 6 months. Why do I need this online presence?" I see. I hope you agree with. So that kind of things are seeing. I see them as an opportunity rather than feeling that they are distressed. Another example which I think which makes many companies distressed is, like, I give an example of an e-commerce company which was earning awards and all that, and the entrepreneurial award and the fastest growing company and all that. They reached up to $10 million, and they were bleeding. And maybe the right size of that company was only 4 million or 5 million, and they were trying to stretch it to 10. So so we have a lot of experts here. We can delve on those things and say, when we're looking at a company, how do we look for? And we can look for what is the right size for that company, looking at the financials of that. So do you guys jump in? Anybody who have any thoughts? Welcome, Marlon, and welcome, Katie. Any thoughts on that?
Yeah, it's
Go ahead. Sorry.
yeah, this is Adele. So just kind of a quick background. So I've been a restructuring banker for, I don't know, like 10 years. I just kind of left my firm, and now in the process of one of the things I'm evaluating is like acquiring a small business, and that topic kind of intrigued my interest. But Sandeep, to the point that you raised, I have faced that. I've seen that a lot, where companies were at like, let's grow, and because the mission is grow at any cost. But when you start looking at their business, you see that like 50% of their customers are not really profitable, and that business, if the right way for them to continue is to shrink and then grow. And the way they do it is like, you need to kind of focus on customers that make sense. And the other customers, you fire them, put them on like self-service, and to the extent that they want to stay, great. If they don't want to stay, great as well. And you need to right size your business, because your product, the demand for your product is not a big market, and you focus on the ones that matter.
Excellent point. And I think I agree with you, and I feel that if we want to grow, we can grow by acquisition also, after being right sized, after being optimized and all that. But one thing more I want to talk about all of you is, and it may change the discussion a little bit. And Nayab taught me a few weeks back, about two kind of turnarounds. One was a profit center turnaround, or profit and loss account turnaround, income statement turnaround, and one was a balance sheet turnaround. Nayab, can you explain that to us again, and then we can talk about that a little bit?
Yeah. Thank you, Sandeep. In fact, I'll try to keep it at very high level. I understand David and Adil. I mean, we have got like people from investment banking background, but there might be a couple of them who may not be. So the point is, I mean, of course, I mean, the purpose of the business is to improve the bottom line, but at the same time, how that bottom line is being achieved. So if you look at the profit loss, most of the time, what I see, people only focus on profit and loss. They just keep the balance sheet aside. Hey, these are all the assets and liability that we are keeping. Only give us some information, but it's not. Unless and until we don't look at all the three financial statements, be it P&L, income statement, balance sheet, and cash flow, you will not be able to assess the overall health of the business. So if you want to restructure, you also have to focus on all those three rather than only one. So when you talk about like income statement restructuring, people normally focus on the top line, anything like, I mean, it's how your gross profits are being achieved, what are the expenses you're spending to reach to your bottom line. And while doing so, a lot of time they forget, they only look at margin, but they don't look at contribution margin concept, where when we are increasing your sales, how much contribution margin is being generated by each additional unit. They only look at the gross profit, that what are we achieving as a whole, but not each unit, how it's contributing. And just to connect that to the example when Adil mentioned and Sandeep mentioned, that while you are increasing your size of the business, your pressure is, your KPI is sales, 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 sales. But how that sales is being achieved and what that sales is contributing. If your contribution margin is dropping over a period of time, though you're ramping up your sales, but at some point in time, your gross profit will be impacted. A lot of time people don't look at that holistic picture as such, and that's one of the examples where we have seen businesses failing, looking at the income statement restructuring or assessment. Likewise, on the balance sheet side, people don't look at the working capital, how the working capital is being managed, because if you're not sort of optimizing your working capital, be it the P2P cycle or your order to cash cycle, if it's not being optimized, then you are running a risk, financial and operational risk. You are running a risk on your profitability. Ultimately, is going to impact your top line as well as the expenses. So I mean, we have to look at it in coherence. That's the discussion we were having when Sandeep and I were talking about the two approaches.
Any comment?
No, I think that's an astute approach. Whenever I'm kind of going into these companies, I do exactly that. I try to assess, that contribution piece right up front in sort of core areas of the business, because, at that stage, most of these companies are, family owned. Maybe they're not as sophisticated financially as we would be, analyzing those things. But, from a, takeover perspective and turnaround, that's where the real, gaps will be in terms of value that you'll be able to, drive out of that. And it's important to know it's not just one piece of a pie on the top line or bottom line. You got to look at those, each of the contributing, items in the business.
Okay. I want to talk about two examples here, and just so that we carry on our conversation on how to identify and find those companies. One example is for a print company I was looking at a few months back. The guy kept unsettling me by unsettling is a very heavy word, but has unsettling me on this P&L and saying, "Hey, I took out 175K last year as a loan, and this is in addition to the earnings we see in the P&L and all that." But when I kept looking at the P&L and their balance sheet, he couldn't even show us anywhere. So probably what happens is, like David just said, they are local small companies. He went to the bank and took out some money, and that he considers himself as taking a loan or something, and then it becomes it's not even shown anywhere. I don't know how some of these guys work. The second example I would like to discuss is for a small CNC company which was doing around 3 million as the revenue. I was so much interested in that, but when we realized that it is so asset heavy and producing only around 150 or 200,000, maybe less than that on a regular basis in revenue in profits, and the multiple would not have given him enough money to motivate him to sell it to us. He was an old 80-year-old man, but he was stick to his business. Now, in this case, we proposed to him that if you want to sell it to us at almost zero, then is the only way it works, or maybe one time your revenue or something, which is around 150 or so. But the best way for him at that point was to sell his company and sell his assets and give it to somebody and just take care of his real estate. He would have made more money, and that case. So I think in these kind of companies are good for a strategic buyout kind of thing, but for a searcher, sometimes that doesn't make any sense if it requires a lot of real estate and assets and all that. Would you have anything to say in these kind of two examples, or David and Ethan and Adele, from your experience, share any other example?
I think age of the founder is definitely an issue. I've got a company right now, and you asked kind of where and how maybe you identify these. I mean, a lot of these companies are stressed just from a financial access perspective. I've got a roughly 20 million a year electrical contractor I'm working right now. minority owned. They've got all the benefits of being a tied in contractor in Chicago. But they've self-funded this. I mean, it's been in their family for over 50 years. Owners are now like 50 years old, and it's either they're faced with a decision of trying to come up with their own personal money to keep putting into a business that's losing, or find what I'll call sort of an angel, whether it's a searcher or a PE or somebody that is willing to take on the financial risk and close that access gap. Because in this instance, it's really, these guys are losing money because they can't access enough capital to support the contracts that they have. And so it's turning the other direction. They're either capped out because of the balance sheet or, negative earnings, but with, some incremental capital, it really could just be unlocked in that way. And, I've seen them get very motivated to say, I don't want the sort of capital risk. I'm willing to kind of turn over the keys in a sense, but stay on because I love the business. I've been a foundation to it. And so that's a strategy I've been working with recently that I've seen really kind of take off, because, you become a sort of benefactor and there's a sort of mutual, desire, to get the business. You get it at a fraction of its normal cost. And you can get some nice plays out of that. And most people, again, it takes kind of identifying what those core areas are. In this instance, it is just purely a economic, strain. And I've got other companies, even ones that I'm an owner in, we do a couple million a year in kind of food and beverage manufacturing, and we're capped out just because of our receivables on, the amount of stuff we can access to turn, whether it's a PO, line or a receivables line, anything that incrementally would, make this a couple more $1 million a year business would really influence the curve. And so I'd say if you look at, there's a lot of those companies, talk to the finance companies, talk to, those parties who are in the course of dealing with them. They're great referral sources of stress companies that they turn down, but they're happy to kind of pass it along.
Yeah. So I have a question here on, like, I usually used to traffic with companies in my prior role. Companies are much larger, right? So going through a bankruptcy and going through a restructuring in a bankruptcy, and like, is sometimes it would make sense because like the administrative cost is relative to the size of the enterprise, it's not that big. So you can restructure. But if you're talking about like small business, and now if the problem is the company has a lot of debt and like it's more of like there's no equity value and this needs to go through a regular restructuring. Question is like, is there anything to restructure, like from your experiences, is there anything kind of to restructure around that you're going to have a going concern business on the back end? Because the lenders don't want to own this business in all cases.
Well, I mean, it depends. I mean, to my experience, and you're right. I mean, because I also saw very huge businesses, and I mean, there is not a single size fit like sort of concept or a strategy that applies. I think if a business is already like sitting on negative equity, and there's so many loans or payables which are outstanding, and operations are not able to sort of justify the repayment at least in shorter period of time, then I mean there has to be drastically something drastic has to change, and for that, of course, we have to pump in more equity to make it more viable, increase the size of the business so that ultimately the operations are sufficient to first of all pay off whatever debts are outstanding. Equity might do a little bit of part. So I mean, in those cases, I think it becomes much more lucrative for somebody to acquire that business, because mostly if it is negative equity business, you can acquire it at pennies to the cost, and then turn it around using that additional cash flow, provided your operations are able to sustain that growth that you are aspired to do, to sort of implement. A simple restructuring may not help, because if the operations are already like at an optimal level, then it's only a matter of maybe increasing the size of the organization.
Yeah, but let's take an example where like you have the company has $5 million of debt on it, and the value of the company is like $3 million. Is it really feasible to go through? I'm guessing, given the size, it's probably an ABC, and you go to the lenders and say, "Hey, you take over through an ABC, and I'll buy it through for you at 60 cents to the dollar." Is that something that you see or you come across?
To my recent experience, I haven't seen anything like specifically like this.
Mhm.
But in larger companies, I've seen like structuring where we went to the lenders or like the bankers or private lenders or private equity investors, where they came in, they arranged another outside debt, restructured the old debt because of the way the company was stuck in a certain situation, and then try to scale the business to a level where the operations could, sufficiently pay off the new restructured debt. So that's what we can do in larger or even medium-sized businesses. Smaller businesses, I mean, if you don't have a lot of assets, ultimately you have to scale it to the next level.
Yeah.
And I'd add one thing, as you approach those things, and this is a challenge.
VP of Engineering at Dataville.
Sorry. I think it's important to understand what the upside of the potential is, because it's one thing to look at these and say, I can turn this around by, getting some efficiencies on the cost side and the operating side. But it's going to be worth my time to take this business over if I can't grow it, 10x in the next few years with, my leadership, my capital. And I think for me, that's how I've approached, some of my acquisitions, just from that perspective. It's easy to get caught up in, I can save here, I can save here. But you may very well find yourself with a modestly profitable company that doesn't have a real upside to it. So I think you got to gauge what your longer term approach with that business is. Can you add businesses to it? Can you add meaningful revenue? Do you want to use it as a platform to acquire other businesses where you can really scale it? And I think that becomes really kind of a gating question as you approach these companies, more so than just, can I just turn it around to basically be profitable? Because then you might just be, reinventing someone else's, business as they had it, and hoping that it turns out right over time.
Yeah, exactly. Even if you don't find any like opportunities to scale the business, create some synergies, maybe, I mean, if it is not vertical, growth, it could be horizontal as well, by creating synergies with other similar businesses. Then capacity utilization is one question that you should always look at, that can we really utilize all the capacity? Next, if you want to scale it, is there sufficient market that you can tap into? If there is none, then no matter whatever you do, you'll only play within a certain sphere. So, I mean, we have to sort of look at it at a more holistic level as compared to just looking at cost and sales. And that's why we were talking about like the balance sheet approach as well, because here when the balance sheet approach comes into play, that what assets do we have? What is the capacity utilization? If we sort of, double the assets using a loan or maybe an equity injection, can this be, can this multiply the revenue by, say, 2x or 3x or whatsoever? And would that be sufficiently able to pay back the equity injection that we have or the loan injection that we had? So it's more of a holistic approach that we need to look at.
Got it.
Sandeep, you're on mute.
Right. So what I would request, encourage Katie and Michael also to jump in and share their opinion about anything. It's just a conversation between all of us, and I believe we are all live on searchfunder. Now, I want to ask another question. I think David brought that up a few minutes back, but I want to ask about, what is the biggest challenge do you think owners have, in my opinion, in accepting the right price for their company? In my opinion, this is the biggest challenge, because they are of the opinion that my company, I've spent 30 years on it, and it has much more value than we are saying the value is at, because there is always a risk of not being able to raise, not being able to do what we easily think that we can easily scale. And I'll give you one example. And I always say, we always think most of the searchers think, hey, I will be able to bring in more sales and more with a few marketing things, and that's the easiest trap, in my opinion. Whereas increasing sales and marketing with even efforts is not that easy. I have had many times from humbling experience about sales and marketing, even though I have spent more than a decade in that field. So do you guys want to say something about this, and mainly on the owner's mindset? In my opinion, is the biggest challenge for accurately evaluating the company and making them accept.
I'll give you one example. I deal with car wash franchises a lot. Rolled up some and sold them to big PE shops. And I'll tell you, over the last 24 months, now it's got muted over the last 12 months, but 18 months ago, the purchase by private equity and other bigger groups of some larger franchise really kind of put the market going from, 6 to 9, times to 22, 25. And it really put in a lot of these, smaller independents, this idea that somehow they were on par with everybody and they wouldn't do anything when they should have been doing something to just get out. I think that's a real problem when they start looking around. So I think when you approach those people, the extent that you have some real like firm, not just kind of haggled, negotiation, my number, your number, but really come armed with some facts and ammunition to support, that valuation. It really does help the case, because in time, I find even if their first reaction is that way, after they get a chance to ponder on what you've kind of shared with them and shown them the sort of the truth of the matter, they'll always, I've found more times than not, I'll get a call back, several months later where, they thought they had a rosy picture and everybody told them no, and now they're figuring out that they landed right back where you told them. And so, I think that's always helpful to do that. But usually looking around is a dangerous game for people in a lot of industries when they see bigger transactions go off and think they're somehow on par with those from a multiple perspective.
Yeah. And what do you think they are worth? A smaller company, in my opinion, is maybe 25% of the large IPO, or the company in the public market, or is it 25% in valuation terms comparatively? If suppose the other company is like, I give you an example of SaaS. I was talking to the software company. It was not a SaaS company, but I always give this example. I think it was Zendesk or something like that, or Zoho or Zendesk, which were given an offer of around $16 billion or something. And then 10 months later, they refused it. And 10 months later, they accepted it $8 billion or something like that. I'm just paraphrasing it. And it opens my eyes and tells people, and I share this example with people, you think your market decides what's right or wrong, right? And it's not us. Now, if there are many PE firms and with your experience, and they start looking at and offering more price, the price will increase. Maybe something, how much is that person's business valuable to the other company? Anyway, so what I wanted to ask is, how do you I another wanted to ask was that what kind of resources, you said about valuation, what kind of resources do you use to evaluate a company? And you said you go and share or that valuation with the owner and say, hey, this you go armed with that resources. What are those resources? Can we know?
Yeah, I mean, a lot of times it's, it'll be comps that I think are more relevant, whether they're geographic or size, that's the type of data that I'm usually using. But then just, fundamental valuations, even on a earnings basis, I mean, can really show somebody something that, they're just, and again, a lot of these folks, remember that, again, until you get to a certain size, they're not, I don't want to say they're not smart. They're obviously smart because they're doing what they're doing and they know their business, but they're not necessarily sophisticated in the capital markets or the sale market. And I'd say the one thing that I would throw in here too is, depending on whether they've kind of got a broker, and that's, searchers see a lot of the brokers quite frankly, putting forth a lot of deals, and their motivations obviously are completely different from what I think is sometimes sound judgment for what, meeting expectations are. But, even them, it's hard to refute, facts that you can point to, whatever sources you use, whether it's, again, whether it's public information, whether it's, other business comps, other things. I mean, I know even on SearchFunder now, they have a lot of background transactions that they kind of show and things of that. All that's is very helpful. Again, you don't have to share your secret sauce, but you could certainly put together, a few pages of why this is, what it is from my perspective. But yeah, that's the certainly can be a challenge sometimes, but I think even talking to other advisors, or folks who, and those are always good calls to have as well. If you're interested in an industry or a business anyway, and you're not talking to others in the space to be educated enough to know what that value is, then you're doing yourself a disservice as well to not understand how other people are doing it and approaching it as well. So.
Yeah. Yeah, right. Anyone else? Any comments?
Yeah, to my experience, it's sometimes people take it as a science, but it's a combination. It's a science and an art at the same time. So the art of assessing the value versus our art of negotiating with the seller. So once you combine both of these aspects, then you can strike a good deal.
Yeah.
And there's some structural mechanisms that I think you can utilize. I mean, again, like earn-out structures, things like that, where you can bridge some of those gaps. Those are the uniquer aspects of things that I see a little more frequently with smaller companies, that tend to be, helpful in kind of getting some things over the hump then.
Yeah. And sometimes like pricing is also because smaller businesses, you have to understand where they're coming from, because I mean, to my experience, a lot of time they ask for a certain X amount of dollars for a business if you're going for an outright purchase or acquisition. But for instance, if you make them a little some different offers like overtime payment, you can always like play around or sort of change come up with different options. And sometimes they also work with them. For instance, a retiree who might be putting that money in a bank and getting X percentage of return, and if you offer a little bit better over a period of time, so one way or the other, I mean, you can always strike deals which may work for both the seller as well as the buyer.
So I would like to add that to contribute to respond on that, my own question, that what resource do you use? And I can tell you 3 resources which have worked for me in the past. Worked in the sense in getting that person nod a little bit. It's very difficult to reduce the price, but I can tell you 3 things. One is there's a metrics on BizBuySell, which tells you what the valuation is for that kind of a company, and that's it. So if you search Control F on that document, that link, you'll be able to see, say, laundromats in this price, or car wash at this price, or this price at 3 multiple, or construction companies at this multiple. That's the easiest thing, and I use what is the lowest in my communication with this. And the other one is BVR, I think, on SearchFunder, where you can go and search for the same size company and last year how much it sold for and all that, in what state, and then you have some idea of that. Third thing, which has worked very well for me, and I didn't acquire that company finally, but there was an LOI signed and we did not go for it. Ultimately we exited. There was a home care agency, and it was asking for, say, $1 million, and not reducing the price or anything, and broker didn't agree. But one of my searcher friend at that time went in and spent $1,500 and got a valuation done from a certified valuation expert, and just sent that, and it came out at around 580 or 480 or something, and that reduced their price to a large extent, and then we were able to get some seller finance and all that come play with it. So these are the 3 things which can help. Now, I don't suggest that you spend $1,500 to give it to a valuation expert, there is, because I could see on that report which company they are using, and I forgot the name. And if you guys send me a text message, I can send you the name of the company. That company, that software charges you only a couple of $100 a month, and from that, so customer, the thing you can play around, create maybe 30 reports or 20 reports in a month, and just send it to him. Here's Mr. Broker or Mr. Seller, you're selling at this price at your level, at your revenue or profit level. You are only half of that or fraction of that, and that report, a fancy report or a PDF report, can actually change a little bit depending on the motivation of the person. Any comment on that? Adil?
Yeah, so you like on the third one is just gonna clarify, is this like basically getting like third-party data? And when I talk to third party, I mean like processing transactions and like packaging it in a report so that you're showing them that like it's not negotiating data to support your valuation.
Yeah,
that's kind of the objective of it.
Yeah. So I would say that you go for that software. I am not saying I'm against valuation experts. They do their own good job. But at the before LOI and all that, I don't suggest anybody go and spend $1,500 on every lead we work on. $300, $200 a month is very good. I can send you the name of the person once I get the thing going. Anything else? We are almost close to that, and so please share your LinkedIn links here, and so that you guys can connect on LinkedIn also. No, it is all about getting connected, and I am always available to chat about businesses and all that. We are looking for acquisition. And I always say that I'm on an investor visa, and I'm a Canadian citizen on an investor visa here in the United States for the last few years. And I am very motivated to be a partner with any searcher who wants a hand to co-own and co-run the company, or sometimes even invest a little bit if the searcher is willing to go in for SBA route. So both ways I can be but I don't want to be an investor and just sit on the side. I've not reached the level yet, but we will go there at one point of time. But at this point, I want to own the company rather than just be a passive investor. So that's what it is. And anything as a last comment, and we can maybe chat in the future, or maybe in a month from now again.
I appreciate you putting this together. It was very helpful, and I think these kind of things are always good because you don't know what you don't know, and you hear things that spark conversation and thought. And I'd say for me, feel free to consider me a resource. I mean, I have paid databases and things that I do from a bigger perspective, whether it's SNL, S&P Global, or PitchBook, and things that I can do data runs on, that I'm always, happy to, help somebody out here and there. So those kind of things, and friends and spaces can be helpful at times. And, so feel free to reach out if I can be of help in any way. And it's always good to just kind of bounce things off and see if your perspectives are as well. If you have advisors, that you guys, or people that are part of your, sort of search effort, or even if they're just colleagues, I think it's also helpful to be able to just bounce things off and have a sort of litmus test on if you're thinking about it the right way or, missing something.
Yeah, absolutely. And it's a very lonely journey when people are, becoming searchers. They want to do it themselves. A lot of times there are so many moving bits and pieces, and I think it makes sense to talk to somebody who you can trust. So likewise, if you need any help, reach out. Let's keep sharing some notes, sharing information with each other.
Anything, Katie, Adil, Ethan?
Again, no words of wisdom from me. I'm really here to learn, and I'm learning a lot here. Just listening to you guys, bounce ideas here. Again, I just know that sort of high level of of where the opportunities are here, but kind of understanding in the weeds and diving into some specific examples and your experiences is really helpful. So I am excited to hop on the next call as well. So thanks for putting this all together.
And yeah, I'm trying to do it every once a month, and I also do, Ethan, every Friday we have a California networking session, and if possible, join. Nayab and I are always there. I'm a coordinator for that, and sometimes very good crowd comes in. Sometimes we both look at each other, Sometimes we just get the work done from our own discussions. But anyway, thank you very much.
I'll just jump in as well and say thanks. I've been listening to all of this, and I'll probably follow a few of you up afterwards. I have a few opportunities I'm looking at from an investment perspective, but I haven't dabbled too much in it from a numbers perspective before. So I've been doing all my own research. I'd love an extra set of eyes if any of you are willing to help out with that.
Yeah, and if you want to reach out to Nayab, I don't think he is there on searchfunder right now, but LinkedIn is the right place, or reach out to me. I talk to him on maybe 2-3 times on a daily basis, so a day, and I can just ask him to reach out to you. Thank you very much, guys. Thank you.
Katie, my LinkedIn is there. You can always reach out to me if you need any help from finance point of view or looking at the balance sheet profit loss.
Okay, thanks very much. Appreciate it.
Thanks.